Hello, this is Ahura from Moted Markets. We'll be with you with the global economic outlook in the week ahead, which is going to be the week 39 in 2024. As always, first we will check what happened last week, and then we can see what we can expect from the markets in the week ahead. Last week, it was mostly about the central banks, as we talked about that, and we had several videos during the week, and we explained what happened one by one in all of them. For more details, you can go back and check those videos about the central banks meeting in United States, Fed meeting, about the BOE meeting, and BOG and other banks. Anyway, this last week, the central bank in United States cut the rates by 50 basis points. In Brazil, we had a surprise with the increasing 25 basis point rate cut. Same thing happened in Australia a few months ago. And then we had a policy meeting in United Kingdom. BOE held the rate at 5%, which it was right now. In Japan, we had a holding policy at 0.25 basis point, which is the currently at 25%, which is the currently at that. Generally, in China, we didn't have any changes in the interest rates and monetary policies. Generally, that was what happened last week, and what we can say that this gap between the spreads in the different central banks can cause more carry trade in the banks and can cause more uncertainty among the markets. Anyway, besides the central banks meetings last week, we had inflation data as well. In United Kingdom, we had inflation steady at 2%, with mostly it had 2.2%. Sorry, in Canada, we had the inflation falling by 0.2%, which caused the annual inflation to fall to 2% from 2.5% of the previous month. In Eurozone, we had inflation, which is inflation for August, and with 0.1% monthly raise, annual inflation fell to 2.2% from 2.6% printed in July. Generally, the data showed that the inflation is falling. The overall economic data we didn't have that much other economic data. For the week ahead, still we have a central banks meetings in Australia, in Switzerland, and also in Mexico. Australian Central Bank on Tuesday will have a monetary policy meeting, which is the main bank that we have. We are expecting to see holding policy at 4.35%. We don't expect to see any changes in the policies as inflation started slowly increasing in recent months, while the labor market is showing the more significant data. So we don't have any force right now to cut the rates at the moment with the positive economic data, while the inflation is still the main concern. So holding the rates will be the best decision, which will be the best decision for this week. In Switzerland, we will have the monetary policy meeting where we are expecting to see the Swiss National Bank to cut the rates by another 25 basis points to 1% from 1.25% that currently it is. Generally, the National Bank of the Swiss, they do not like having a high rate, so they're always looking after cutting more rates to have a lower rate. This is the normal policy we can expect always in Switzerland. So the lower, they were one of the banks that started the cutting rate very earlier than not compared to other banks, and continued it by 1 month after another to bring the interest rates down. Out of that, besides the central banks, we will have a very busy week in United States, while in Europe and other areas, other economic areas, we don't have such a busy week. Let's start first with Europe, and then we will continue with the United States. In Europe, we will have manufacturing and service sector PMIs, both of them for Eurozone, and most Eurozone countries we're expecting to see weaker number compared with the previous months. For the general Eurozone area as well, we are expecting to see the service sector PMI to fall from 52.9 to 52.4. For the manufacturing, we're expecting to see 45.8 to fall to 45.6. That's generally we can say that we can say that the Eurozone economic area is still facing with more challenges. in the United Kingdom, which recently in previous several months we had a better than expected data. Still, we are expecting to see the better number compared with the Eurozone and most PMIs above 50 expansion levels, but still we are expecting to see a little bit weakness in this in August report as well. In September report as well, sorry. For United States also, we are expecting to see the we are expecting to see before going to CB consumer confidence, we're expecting to see a little bit weakness in both manufacturing and service sector PMIs as well, but it's not going to be it's not going to be a big fall. It's a little bit, especially for the service sector. Manufacturing expected to see a little bit increase from 47.9 to 48.5, but it wouldn't be such a big changes actually, but still they're a little bit better than previous month, but still under the 50 expansion level, and we are not we cannot say that the manufacturing sector also is back to the normal condition, but we are expecting to see a little bit weakness in service sector as well. But generally, the other data on Tuesday from United States, we're expecting to see the CB consumer confidence to fall back again from 103.3 to 102.9. We now that CB consumer confidence after reaching 117 and 114 fell to 97 and then slightly recover to 101 and 103. But now we are expecting to see a little bit back on the consumer confidence. On Wednesday, we will have new home sales. We're expecting to see 2.5% fall in the new home sales, a little bit fall in the new home sales, because as the units, we're expecting to see less sales from compared to previous month. It can from 739K sales from the last month, previous month in July. We're expecting to see just 700K units new home sales in August. On Thursday, we will have very important data on United States GDP, core PC price index and PC price index for second quarter, and also initial jobless claims. Fed Chair Powell press conference. We will have Fed Chair Powell also will have speech. Generally, the Thursday will be a very, very busy day, and it's not just about Mr. Powell. We will have other Fed members that you're going to speak on Thursday. But generally, about the GDP, we're expecting to see 3% GDP growth for the second quarter, which is going to be a great number if it happens. On durable goods orders, last month we had a very good number, 9.9% increase in the goods orders, but it was mostly thanks to aircraft and thanks to the Boeing's orders that we had, air transportation sector. And out of that, excluding the transportation sector, we had 0.2% fall in orders. For this month, for September, we are expecting to see for August, we're expecting to see durable goods orders to increase by almost 0.3%, 0.2, 0.3%. We're expecting to see, excluding, I mean, this is excluding durable goods. This is excluding transportation. Including transportation, we're expecting to see again a little bit fall, 2.8%, because the transportation orders, the Boeing orders, is fall very largely with the large numbers they fall. So that will cause the general or headline number to fall by 2.8%. But excluding transportation, we're expecting to see 0.2, 0.3% increase in orders. But finally, the main focus of the week will be United States consumer spending, PC price index, and personal spending and income. Income expected to increase by 0.4%. Spending also expected to increase by 0.3%. But last month also spending increased, but consumer spending increased by personal spending increased by 0.5%. Unadjusted inflation, adjusted inflation, it was 0.4%. Generally, spendings, personal income, and spendings are still strong. But the focus will be on the core PC price index, which is expected to increase by 0.2% monthly, and on the annual rate, we are expecting to see the core PC price index to increase from 2.6% to 2.7%. If that happens, means that with the other data that we're expecting to see, that we are expecting to see that a little bit more pressure on the stock market, as well as a little bit pressure on the stock market, as well as United States dollar. Generally, the data that we're expecting to see from the United States market, and generally the data we are expecting to see from the United States, are not such a positive data. So, which means the pressure on US dollar index can continue. And despite 50 basis point rate cut in the stock market, with such a shock that we had last week, we are expecting to see pause on the bulls in the stock markets, and even the pressure on the stock market in US dollar and on the S&P 500 and other indicators in the chart, indices in the chart. As I told the chart, let's go and check the charts and see what we do have on the charts. We can start with we can start with the US dollar index, the XY chart. US dollar index trading about 100 level, but it's around 103, 130, 150, 40, these areas. Generally, we can say that from technical point of view, if we say that we can say that right now the US dollar index needs a little bit stabilization in the market, and the technical indicators such as RSI and OBV, they say that generally we are in a downtrend, but we need some correction. Most probably oversold area, recovering from oversold area is in line will be supported with slightly more buy contract. So which means that we will have a little bit recovery before next trend. So 101, 101.50, 40 will be the areas that we can see. But generally, if I want to say my idea about the next week, we will have the Zoid movement between 100 and 100, 180. That will be the Zoid movement for next, at least for the next week, and maybe by the end of this month. But generally, we will, but for this week, until we have the PC price index and core PC price index, if we have more than expected inflation for the personal spend, for the personal use, for the personal spending, for the then we will have like more demand for US dollar and pressure on the stock markets, and vice versa. So until Friday, most probably we will have a slight movement between 130 and 100, 180 for the US dollar index. As for the gold, gold still generally in a positive area, in a bullish run, in bull run, and can price still rise, but general the data, fundamental and technical data shows that we will need more stabilization right now here, and most probably we will have some correction in the gold market before any next movement. So now we are in a cancellation period. We will see gold. We can expect to see the gold price to fall back around 2,600 and a little bit lower until 2,580, 590 even, and then the next trend can be created after that. But generally, the overall trend is still positive, as we have a more conflict in the geopolitical conflict and geopolitical tension between Russia and Ukraine in one hand, Israel and Hamas and Palestinian in one hand, and Lebanese on the other hand. So the overall the geopolitical tension, especially in the Middle East, is not such a good condition. So it can increase the risks in the market, and this higher risk in the market will increase the gold demand. Same thing we can expect for the oil. We know that the oil, with the tensions in the Middle East, we can expect higher prices for the oil. But on the other side, we do not have such a surprising numbers in economic data. So economic data and demand are not supporting the higher numbers. Geopolitical tensions are not supporting lower numbers. So most probably we can expect to see the side movement between 69 and $71 at the moment for now, until we'll have another main reason, important reason to see which can change the market. But generally, for now, side movement is the most possible and most expected scenario. On the stock market, S&P 500, Dow Jones, and Nasdaq, all of them, they are facing with more challenges around in their week going higher. General trend for especially for S&P 500 is still positive, but we have very important level at 5,550, and any next movements, any other movements before going to go higher or further, we need to see the reaction of the S&P 500 to 5,550. Under 5,000, and the main pivot will sit at 5,500. So we can say actually like this, that 5,005, as long as S&P 500 trading about 5,500, the bulls can lead the market. Falling under 5,500 level, which is the key pivot point for S&P 500, for US 500, then it can change the market trend. But generally right now, we can say that with the falling OBV and slower RSI, we can expect some correction in the stock market as well. But this correction, especially for S&P 500, can be the reversal in a trend if only it falls under 5,500. Otherwise, it will be only the correction. On the crypto market, we can say that the Bitcoin, after its previous fall and recovery, has recovered more than 50% of its Fibonacci levels, which means that it's not already the correction, it's a new trend. But how far this trend can continue is under question, as we see the negative reaction from OBV and RSI both in H1, H4, and daily chart in most main charts for the Bitcoin, which means that generally right now still we are in a positive area. We are still, we can say that price can increase, especially as long as it's above 60K, but we have signs of correction as well. This is general data that we had and we're going to have in a week ahead. And if you had any other question, please don't forget to write down in the comment section. I will try to get back to you as soon as I can. Have a good week. Bye.